Welcome to the stock workout where we flex on the market to make gains. In this video, we're going to be talking about Nio and their earnings that are due to come out on the 1st of March after market has closed. We're also going to be going through a upgraded price target from a British bank called HSBC. And then we're going to take a look at the charts and I'm going to go through the opportunity that this market sell-off has presented us. But before I get into it, if you haven't already, hit that subscribe button so I can keep bringing you more content. So to start off with, I found this article online. It says Nio Stock price $54 target up from $44.70 by HSBC. HSBC is a British bank. That's basically all the article says. It gives the analyst name and they maintain a hold rating on Nio shares. This article just came out on Friday the 26th. As you can see, it says 22 hours ago. I'm recording this on the 27th of Feb, so it came out just 3 days before earnings. Then if we take a look at this article over here, it asks, will Nio's sagging stock get a lift from earnings? A Q4 preview. So going on further down, it says Nio is expected to report a narrower fourth quarter loss of 7 cents per share on revenues of $1.01 billion, according to estimates. In the same period last year, being 2019, the company reported a loss of 39 cents per share and revenues of $406.99 million. And in the preceding third quarter, this is the third quarter of 2020, revenues were at $666.6 million and the loss per share was 12 cents. As we all know, Nio is a growing business. It's currently a loss-making business because it is, expanding. It is growing significantly. And a lot of the time you do see new companies that are expanding and growing at such a rapid rate have losses. However, a good indicator is to see that their revenue keeps on growing. So Nio's estimated revenue is expected to grow. Then further on, we can see that Nio confirmed in early January that it delivered 17,353 vehicles in the fourth quarter. That's 111% year-on-year growth. And that momentum accelerated in January too. So January delivery numbers climbed over 350% to 7,225 vehicles. The article then carries on to talk about the fact that Nio is operating in a market that presents a huge opportunity. So what we're looking for when the results come out is an increase in revenue and a narrower gap in that loss per share. So as you can see, it's a narrower fourth quarter loss of 7 cents per share. If we hit that target, then that is a good sign, because the previous loss before that was 12 cents, and if you compare the year before in 2019, it was 39 cents per share. So if we're slowly narrowing the loss, then eventually Nio will become profitable, but we need to see that revenue keep growing. That's where the delivery numbers come in. Nio keeps increasing its delivery numbers and we will also see the revenue increase. So taking a look at the charts, we can see that there has been a huge sell-off in the recent sort of 2 weeks. The Nio price has dropped significantly from around the 67 range down to a low of about 41. This is the daily chart. I've got the 21-day EMA and the 50, 100 and 200-day moving average pulled up. And the opportunity is right now over here. As you can see, in the last year or so, Nio has really hugged the 21-day EMA. So all throughout the year, it hugged the 21-day EMA. And then when you do see a drop, you see a drop to the 50-day moving average. It touched the 50-day moving average and bounced straight back off that. And so that is going from around $42 and then it hit a high of 66. From there it dropped again and it sort of hugged the 21-day EMA. But in this last 2 weeks with the market sell-off, and it has been a broader market sell-off hitting the renewable energy sector and the whole EV sector, and many other sectors as well. But given the market sell-off, we saw the price drop below the 21 EMA, below the 50-day moving average, and it has hit the 100-day moving average. This is where I think the opportunity is, and this is the perfect buy the dip opportunity. Overall, the RSI is quite low as well. It's around 33, and as you can see, the volume has increased quite a lot over the past few months. volume on Friday was 100 million compared to the average volume of 66 million. This may be anticipation for the earnings report, but this price right now provides an opportunity. We've had a price target increase from HSBC Bank, and given the fact that Nio is now sitting at its 100-day moving average, that is a perfect time to buy. I can give you a quick comparison as well. If we take a look at Tesla, if you look historically speaking, Tesla over here, it dropped down to its 200-day moving average. So it dropped down to a price of around 63 over here, and then it bounced straight back up. It bounced straight back up and went sort of only a matter of weeks later to 172. Now, that's one example of it. And if we go further on here, you can see Tesla hugs its 21-day EMA pretty well. A couple of times it's dipped down to its 50-day moving average. And from the 50-day moving average here, if I zoom in a little bit, it bounces straight back up. So that again is a gain of from 327-ish up to 461. If you go further down, Tesla over here broke through its 50-day moving average and went towards its 100-day moving average. It didn't quite touch it, but it did dip below. And from there again, here and here, it bounced straight back up. So even Tesla's in a good position to buy it now. It's a perfect buy the dip opportunity. So that was just a quick comparison to Tesla. Given the fact that Nio is now sat at its 100-day moving average, it's a perfect buy the dip opportunity. As long as them earnings come in good and strong on Monday after market close, we will see this price bounce back up. Obviously, there's the whole market has been sold off on a whole recently. The market is quite down, so it may take a couple of days for it to be, come into fruition and be absorbed, the earnings to be absorbed. But if you're holding this long term, and I think most people are, then when you look at this retrospectively in the future, this is going to be one of them perfect opportunities where you fully took advantage of the buy the dip. Remember, keep an eye out on the volume coming into next week, Monday, Tuesday, Wednesday onwards. Keep an eye on the volume, make sure that volume's there. Keep an eye out on the RSI just to make sure you know that we're not in oversold territory. Anything over 70 is overbought, anything under 30 is oversold. This may also depend on the market conditions as a whole. Depends when this market sell-off finishes, and then we will see a bounce back up. But the earnings will and potentially can act like a catalyst if they come in strong. If you appreciate that video, drop it a like, subscribe to the channel so I could keep bringing you more content, and I'll see you on the next one.